Hey guys, Drew here, and welcome to the Engineering Success YouTube channel, where each week I talk about different personal finance topics. So if you're into that, be sure to subscribe to the channel so that way you don't miss out on any of my new content. Today we're going to be exploring the idea of value investing as popularized by Benjamin Graham, Joel Greenblatt, and Warren Buffett, just to name a few. One of the most famous Warren Buffett quotes is, "Price is what you pay and value is what you get." And this quote in itself really summarizes the idea of what value investing really means. Because value investors are looking to find stocks that are worth a certain amount, their fair value, and then they're trying to buy those stocks below their fair value and hold them for the long term, so that way they can benefit from both capital appreciation and dividend payouts long term while decreasing their risk. So this is a lot like wholesaling. A good example of this would be like going to Costco and buying a box of 100 Slim Jims for, say, $10 and selling each of those Slim Jims that cost you 10 cents a piece for, say, 50 cents a piece. 50 cents a piece is their fair value that you were able to sell them for within the market, but because you were able to get them at a discounted rate, you didn't have to really risk much because they weren't going to drop much lower, with almost a guaranteed return because they were below that fair value. And the reason that I come up with that specific example is I remember kids in high school doing exactly that with what they called meat sticks, which was basically just off-brand Slim Jims. And that's what happens when you go to a country high school. It's great times. So when value investors, what are they looking for in a stock? Well, there are four primary things that I've found value investors look for in stocks. And that's speaking as someone who considers themselves mostly a value investor. So this is my opinion and what I particularly look for. And it's what a lot of people that are much more well-known value investors like Buffett, Graham, and Greenblatt look for when they're trying to find good value investment. So the first thing I look for with value stocks is the PE ratio. So I did a video on this a couple weeks ago. That'll be linked up here if you want a more thorough explanation. But basically, a PE ratio is a share price to share earnings ratio. So what you're looking at is the price of the stock, so the price that you pay when you buy one share of stock, and you are dividing that by the EPS, or earnings per share of stock. And that ratio gives you how expensive the stock is relative to the amount of money that the stock earns. This gives you an idea of whether a stock's undervalued or overvalued given its current business. So this is a good starting point for finding undervalued stocks. Generally speaking, the standard for a PE is set based on what the S&P 500 PE ratio is at the time. Most of the time, the S&P or market PE ratio is about 15. So you're looking for stocks that have PEs below 15, but that are not negative. Because if they're negative, then that means that the company didn't earn money, that they lost money. And generally speaking, value investors are looking for companies that have proven that they're able to make money over the long term. The second thing to look for with value stocks is price to book ratio. So the price to book ratio is looking at what the current valuation, or the current share price times the number of total shares that the company has. That's the valuation. You're looking at the valuation relative to what the book price is. The book price is what the estimated value of the company's assets are. Warren Buffett is very famous for this strategy, where he will look for companies that are trading below their book value. Basically, the idea here is that if the company gets in the worst situation possible and they liquidate all their assets to avoid filing for bankruptcy, then he would still be getting a fair price for that company. So it all comes down to your specific risk tolerance, but as a general rule, when you see a company that has a price to book ratio of under 1, or that their share price is less than their book value price per share, then that is going to be a very undervalued company. And as long as there's not some other, outside reasons that that company is maybe going to file for bankruptcy, or there is some unacceptable amount of risk, then that is going to be a good value, and that's going to be a company that most value investors are going to be interested in at least looking at investing in. And the third thing that value investors really look for is a margin of safety. So a margin of safety is essentially a cushion. It's like a price cushion where you want to give yourself a little bit of wiggle room in case you're wrong. So it's a hedge essentially against your ability to value a stock. And people like Graham and Buffett have been known to have margins of safety for up as high as 50% on certain stocks. To give you an idea of a margin of safety, let's say there's a stock that I'm really interested in buying, and that stock is currently trading at $200. But I calculate that the fair value for that stock is only $100. How low do I need that to fall in order for me to buy? And that's what my margin of safety is going to determine. I would say that $100 of fair value is too risky for me to buy at $100, so then I'm going to put a 50% margin on it, or discount, where I will pay $50 for it, because that gives me enough cushion that I'm very confident that it's not going to drop below $50, and in this way I'm able to decrease the risk that I'm taking on, versus if, say, I bought it with a 20% margin of error, then I would buy it at $80. This is just a good way to try and limit your losses, because every now and then, as investors, we are going to be wrong. We want to make sure that we win often, and that when we lose small. That's the key with long-term value investing. And then the fourth main thing that value investors look for is free cash flow and dividends. So free cash flow is the income after all expenses are paid by a company. As a value investor, I generally want these to be higher. I want there to be more free cash flow. I want there to be more earnings per share and less debt. This means that the likelihood of that company having to take on risky debt when there is a loss of cash flow and an economic downturn is much lower, which makes the stock less risky for me as an investor. And also, the more free cash flow that a company has, the more likely and the more capable to pay me dividends as an investor, which makes it a much more lucrative long-term investment, because I'm going to be receiving payments each quarter just for holding the stock, not even having to sell it. And as a long-term investor, if I can get some payout without having to sell my stocks, that's really awesome. Now, there are two main cons that I can see with value investing. The first one is that it is hard to be a contrarian and to buy stocks when they're in pain. That is one of the main tenets of value investing, is looking for stocks that are undervalued, and oftentimes this means that have been hurt very badly in an economic downturn, in lawsuits, anything that would decrease their ability to produce revenue. You'll see, and it'll look like a company is going away forever, and that is when you want to buy it. You want to make sure that you understand the company and that it's a good investment at that price, but being able to have the confidence to buy companies when they are going down or their stock is red, it takes a contrarian mindset. And to give you an example, in this past March, whenever everything was going down, we were seeing these ridiculous drops each day, where the circuit breakers were tripping at the New York Stock Exchange because it was dropping too much for one day. I was buying every single day that it is red, meaning that the stock market is down or a specific stock is down an appreciable amount. I am buying stocks that I like, because I'm going to keep adding on every single red day. And that way I make sure that I don't end up missing the bottom, because I know that I nor anyone is capable of accurately and consistently predicting the bottom of a stock market. But what I can do is I can consistently buy stocks that are more undervalued, and that long term is going to allow me to dollar cost average to a lower price that then will make me more money long term, because those stocks may have appreciated more since I bought them below market value. And because I bought them at below market value and I am very confident that they are good companies, I also have less risk. But it is hard, because you will be looking at your account and your account will be in the red going down. And when you think you want to sell the stock, if nothing has changed, if the stock is still equally valuable as it was before, you should hold the stock in general, and it will see the other side if it is a good company and a good investment. And then the second con of value investing is that it takes patience. Let's be honest, it's inspiring to watch things like The Wolf of Wall Street, or to see YouTubers that talk about day trading and talk about swing trading and all this short-term speculation in the market. But the reality is that's not the way trading works for 99% of people. The best investors of all time that I've been talking about in this video, they acknowledge that they are not able to predict short-term moves in the market, nor am I, and probably you can't either. So value investing is not going to make you an overnight millionaire, the way that you hear people talk about with penny stocks. That being said, you're much more likely to be successful through value investing if you have the patience to buy and hold long term. You will see much lower risk, and you will be much more likely to actually make money. Unlike a lot of the people, including myself, that at 18 that were trying to make a lot of money trading all the time. That's just a mentality that you're going to have as a value investor, is that you're buying a company because you see it as a good value, not because you're trying to flip it tomorrow. With all that being said, overall, the most successful investors by a long shot have been value investors. People like Joel Greenblatt, He averaged a 40% return for 20 years, which is better than even Buffett did, but Buffett has averaged 20% a year for my father's entire lifetime. That is unfathomable. And when you compare that, I would much rather have the lower risk profile and the increased gain potential of value investing than I would of short-term trading. Although at the end of the day, remember that how you invest and what you invest in and when you invest, that is ultimately up to you. So don't just take my word for it. You have to do your own research. Make sure that you know what you're investing in, and make sure that you're not gambling, that you are investing in companies that you believe in. As for the things that I talked about in this video, like the different metrics, a great stock trading app that I really like is Webull. And they have amazing charts that will show you all the different things that I was going over, like earnings per share, debt to asset ratio, the dividends. It's a great platform. It's got both a mobile and a desktop app, so it's really great. If you want, there's going to be a link in the description box below where if you sign up using that and you fund your account with $100 or more, you will get 2 free stocks. So great place to start, and if you want to, you're able to set up IRAs, both traditional and Roth with them. So it's one of the best places, and it's my personal favorite for getting started because the platform is so much better than most of the alternatives. And with that, let me know what you guys think in the comments about value investing, what type of investment strategy you personally incorporate, and be on the lookout for my future videos where I will be talking about investing in other personal finance topics and stocks that I'm buying. Thank you guys for watching, and I will see you guys next time.